Welcome back to the Daily Earnings Reports podcast, everybody. Don't forget to like and subscribe wherever you're tuning in from. Today, we're diving deep into Johnson & Johnson's fourth quarter 2024 earnings. This one, I got to say, it's a bit of a head-scratcher.
Yeah, it is. J&J, they're such a massive company and going through some big changes. So, yeah, understanding these numbers, really key for any investor.
Couldn't agree more. So, you send over a whole stack of documents here, the press release, the supplementary data, financial statements, even those non-GAAP reconciliations. Where do we even begin?
Well, okay, so J&J beat revenue expectations, right?
Right.
Sales hit, what was it, $22.2 billion for the quarter. That's a jump, 5.3% compared to last year? That is correct. And for the whole year, revenue climbed even higher, $88.82 billion. Solid 4.3% increase. Now, initially, they projected growth between 2% and 3% for the year, so they really blew past expectations. But here's the catch. They fell short on earnings. So reported EPS landed at $1.41 for the fourth quarter, and that's a pretty big drop compared to the $1.70 they reported the year before.
Okay, so we're talking a 17% drop in earnings. That definitely raises some eyebrows. So for those of us who, maybe aren't financial wizards, can you break down why that happened?
Yeah. Well, sometimes a company's performance, it gets affected by these one-time events, right? And these events, they don't really reflect the overall health of the business. So if you look closely at the condensed consolidated statement of earnings, sounds intimidating, but it's really just a profit and loss statement. You start to see the nuances behind this earnings miss. And a big factor here was a huge $5.45 billion charge related to ongoing litigation. So that alone really impacted their fourth quarter earnings. Plus, there were restructuring costs, mainly in their innovative medicine and med tech segments.
So you're saying these are like one-time events masking the real story here.
Exactly. To get a clearer picture, we got to look, beyond those reported figures and focus on what's called operational growth.
Yeah.
It basically filters out like the noise from these one-time events and shows how the core business is actually performing. So the reconciliation of non-GAAP financial measures, think of it like a cheat sheet that helps us do just that.
Okay, starting to make sense now.
Yeah.
So while the headline earnings number might seem, scary, we shouldn't jump to conclusions without looking a little deeper.
Exactly. It's like judging a restaurant just based on one busy night. Operational growth helps us, see how the restaurant performs on an average day.
I like that. That's a good analogy. Okay, so let's move on to how each part of J&J is doing. So we all know they're this giant in healthcare, but they have different segments, right?
They do. The supplementary sales data, it breaks it all down. Pharma, medtech, and consumer. Let's start with pharma. They actually did pretty well considering they stopped selling those COVID-19 vaccines.
Wait, hold on. How did they manage to grow without those vaccine sales? I mean, that seems like a pretty big hurdle.
It is. But even without the COVID-19 vaccine, their pharma segment, it achieved a solid 6.5% operational sales growth for the fourth quarter. And even more impressive, 7.5% for the entire year.
Wow. So they more than made up for the loss of those vaccine sales. Were there any particular stars within the pharma segment?
Oh, absolutely. Immunology was a standout. Driven by drugs like Stelara and Tremfya, Stelara had global sales topping $2.3 billion for the quarter, while Tremfya pulled in $949 million worldwide, up 4.2% from the same period last year. So these figures, they suggest J&J's, navigating that loss of vaccine sales pretty effectively, and they're well positioned in this high growth market.
Those are some impressive numbers. All right, so let's shift gears to medtech. I understand that segment also experienced decent growth.
Indeed. MedTech saw 6.7% operational sales growth for the quarter and 4.8% for the whole year. However, it's crucial to remember these numbers, they include the impact of their acquisition of Shockwave, and that naturally boosted the reported figures.
Oh, I see. I'm surprised they still manage decent growth. Acquisitions can sometimes be so disruptive. So are there any areas of organic growth, growth from their existing businesses that stand out?
Definitely. Electrophysiology, for example. Bright spot, showing double-digit operational sales growth, both for the quarter and the full year. So this demonstrates the strength of this particular area within MedTech. Now, the consumer segment, it's interesting, because J&J is actually spinning it off, meaning it'll become a separate company.
So for this deep dive, we should probably keep our focus on the parts of J&J that will remain. after the spinoff.
So got it. And this brings us to a really critical point. The difference between reported growth, the initial numbers, and operational growth, the numbers that show how that core business is doing. And we touched on this with the earnings miss. But it's important to remember those initial figures, they can be influenced by things outside the company's control, like currency fluctuations or the impact of acquisitions.
So can you give us a concrete example of how this plays out in the medtech segment?
Absolutely. If we strip away the effects of the strong dollar and the shockwave deal, that's what operational growth does. MedTech still grew, a healthy 4.6% for the entire year. It's like figuring out how much weight you've actually lost after a big holiday feast, right? You want to see that underlying progress.
Okay. Yeah, that's a great way to put it. Now, we can't wrap up our analysis without addressing the elephant in the room. Litigation and restructuring. J&J's been navigating this complex legal landscape, and those challenges, they're clearly reflected in their financials.
You're right. Looking at the reconciliation of non-GAAP financial measures, our cheat sheet, it's clear those litigation-related expenses have really taken a bite out of their earnings.
Can you elaborate on that a bit? I mean, what kind of impact are we talking about here?
Yeah. Well, in the fourth quarter alone, litigation expenses, they amounted to a whopping $5.45 billion. And for the whole year, this figure reached a staggering $7.152 billion.
Wow. That's a massive amount of money. What about the restructuring efforts? How do those fit into the bigger picture?
J&J's restructuring efforts, you can find details in the footnotes of the financial statements, but it's all about streamlining their operations and boosting efficiency. So, for instance, they're making changes to their orthopedics franchise within the medtech segment and refocusing their R&D investments in the innovative medicine segment. Think of it like decluttering a house, right?
Yeah.
To improve efficiency.
So while these restructuring moves might cost money in the short term, they could ultimately position J&J for a stronger, more profitable future. This deep dive it's incredibly insightful. We've covered a lot of ground, and I feel like we have a much clearer picture of J&J's current position and the factors influencing their performance.
I agree. It's always fascinating to kind of peel back the layers of a company like J&J, especially during, times of significant transformation. And believe me, there's a lot more to uncover.
Welcome back to the Daily Earnings Reports podcast. We're still digging into Johnson & Johnson's latest earnings, and before we were talking about those efforts to streamline and become more efficient, and those kinds of moves, they often come with some short-term pain, right? For long-term gain.
Exactly. And these efforts, they become even more interesting when you think about J&J spinning off their consumer health segment.
Yeah.
Makes you wonder, will slimming down ultimately lead to a more profitable company?
That's the big question, isn't it? It seems like they're really trying to sharpen their focus on the pharmaceutical and medical device businesses.
Yeah.
Makes sense, but is it the right move? Especially with all this litigation they're facing.
That's why it's so important to look at this from different angles. We've talked about reported versus operational growth, but we should also, dig into the specifics of each segment. Remember that supplementary sales data we mentioned?
Oh, yeah, of course.
Yeah.
What jumps out at you when you look at that data?
Well, within the pharma segment, the performance of Stelara and Tremfya in the immunology sector is pretty remarkable. Stelara, for example, brought in $2.349 billion in global sales just this past quarter. Shows you how dominant it is in that immunology market.
And Tremfya is no slouch either. It had a 16.6% operational sales growth for the entire year.
Exactly. Those numbers, they really highlight the strength of J&J's core pharmaceutical business. Now, switching gears to medtech, we got to factor in that Shockwave acquisition, right?
Right. That definitely makes things a little more complex. So if we take out the effect of that acquisition, what does the underlying growth in medtech look like?
Our trusty reconciliation of non-GAAP financial measures comes in handy here. Excluding the currency fluctuations and the impact of the Shockwave acquisition, MedTech still managed a very respectable 4.6% operational sales growth for the year.
So even without the acquisition, they're seeing healthy growth. That's reassuring.
It is. And it's important to note that this growth, it's coming from multiple sources, including new innovations in areas like electrophysiology and continued strong demand for their established products.
So putting it all together, it sounds like J&J is a company in transition.
Right.
They're facing some serious headwinds, especially with those legal battles and the restructuring.
Yeah.
But their core businesses, they're still holding strong.
That's a great way to sum it up. And those strategic decisions, spinning off consumer health and streamlining operations, those could set them up for even more success down the road.
It's like they're clearing the decks to really, focus on what they do best. That's an interesting takeaway for investors. J&J is a company worth keeping a close eye on, not just for how they're doing today, but for the moves they're making to, shape their future.
Absolutely. And I think there's another layer to this story that we shouldn't overlook. We've been focusing on the financials and the strategic decisions, but ultimately J&J's work, it impacts real people. Their products, their technologies, they're used by millions of people around the world.
That's a really important point. It's easy to get lost in the numbers, and forget that these earnings reports, they represent real world innovations, therapies that can make a huge difference in people's lives.
Exactly. At the end of the day, J&J's success, it won't just be measured by, their profits, but also by their ability to keep developing these life-changing solutions for patients and consumers, globally.
Yeah.
Their impact on the world, it goes far beyond the balance sheet.
That's a great reminder. We're talking about a company that's literally helping people live healthier lives. And with all the changes they're going through, it'll be fascinating to see how that mission continues to evolve.
It will. They're at a pivotal moment, and the decisions they make now, they'll have ripple effects for years to come.
This has been such an eye-opening conversation. We've covered a lot of ground, but I feel like we've only scratched the surface.
There's always more to explore, but hopefully this deep dive has given our listeners a solid foundation, for understanding J&J's current position and their potential path forward.
I think so. And for anyone who wants to dig even deeper, remember those source documents, the press releases, the financials, all that good stuff. It's out there, available to the public. Don't be afraid to dive in.
Exactly. The more informed you are as an investor, the better equipped you are to make, smart decisions.
Well said. Well said. Now, before we wrap up this part of our deep dive into Johnson & Johnson's fourth quarter 2024 earnings report, let's take a quick break. When we return, we'll continue dissecting the fascinating details of this report. Stay tuned. Welcome back to the Daily Earnings Report podcast. We break down these complex financial reports, and we make them easy to understand. We've been really deep in the weeds with Johnson & Johnson's latest earnings, and I got to say, this has been one of the most interesting deep dives yet.
Yeah, I agree. J&J is a company that's, constantly evolving, and this particular earnings report, it really highlights that.
We've uncovered some real insights today. What would you say are the key takeaways for our listeners?
Well, first off, despite an earnings miss, J&J's top line growth, it was strong. They beat revenue expectations, which shows, their core businesses they're still performing well.
But those earnings, right?
Yeah.
We can't ignore that pretty substantial drop.
Absolutely not. And that's where, understanding the difference between reported and operational growth is so crucial. Those big litigation expenses, restructuring costs, they're largely tied to specific events and strategic decisions. They don't necessarily indicate a decline in the underlying business.
Right. It's like looking beyond the surface to see the real picture. And that's where operational growth comes in. Helps us see how the business is performing at its core without those one-time events, clouding the view.
Exactly. And when we look at operational growth, we see that both the pharma and medtech segments, they're in good shape. Pharma in particular is doing remarkably well considering they no longer have those COVID-19 vaccine sales.
It's impressive how they've managed to adapt and keep growing in such a competitive market.
It really is. And then there's the medtech segment, which is a bit trickier to analyze because of the Shockwave acquisition. But even when we adjust for that, the underlying growth is still healthy.
So two strong segments, and then there's the consumer health business that's being spun off. That move, it raises a lot of questions about J&J's future.
It does. Will it make them a leaner, more profitable company? It's too early to say for sure, but it's certainly a development worth watching closely. This is a company in transition, and the choices they're making today, they'll have a significant impact on their future.
It's almost like they're at a crossroads. They're shedding a major part of their business and restructuring other areas, all while navigating this complex legal landscape. It makes you wonder what the G&J of the future will look like.
It's a fascinating question, and I think it underscores the importance of staying, you know, informed and engaged as investors. Companies are constantly changing, and it's up to us to keep learning and adapting as well.
Well said. Well said. And on that note, a big thank you to all our listeners for joining us on this deep dive into Johnson & Johnson's fourth quarter 2024 earnings report. We hope you found it informative and dare we say, even a little bit exciting.
It's been a pleasure sharing our insights with you.
And remember, if you enjoyed this episode, be sure to subscribe to the Daily Earnings Reports podcast and leave us a review. We're constantly adding new content to help you navigate the world of investing. So stay tuned for more fascinating deep dives.
Until next time, happy investing, everyone.